with the open banking data, what we're able to do there is where SMEs are applying for finance, they can easily share their data in a digital way that means that they've got access to that finance more quickly. When I was working with one of the tier one banks, they told me it was on average a 112-day process from an application to get the money into the customer's account. So that's when we started looking at additional APIs. So, we work with Equifax to bring in their Equifax business insights. We bring in the company's house API. We bring in open accounting data as well, all just to try and ensure that we're adding value through that process and getting, when the customers do need finance, that they're able to access it in a more timely fashion, So that's what we focused on. And in terms of engagement that we're actually seeing, it is different. The amount of engagement you see on the consumer sharing of the data versus the business sharing of the data. And I think a lot of that, to be honest, is down to the customer experience.
So I want to go, you mentioned Equifax. We've got Andrew here, who's going to hopefully tell us a little bit more about that and also what you're doing to fix the issues we've heard about. Andrew?
Hi, Andrew Fielder. I'm a product manager at Equifax. Kind of following on from what Emma was talking about there, we've worked very closely with AccountScore and built out using portions of their categorization engine to really try and help to understand what is going through business bank accounts, because we looked at, as a comparison, consumer versus commercial bank accounts, and on average in a 12-month period a person might have 600 odd transactions on their account, which on a paper statement looks at 30 odd pages, and then you get 1% that might have 2,000 plus transactions on their statements over the year. If you contrast that with a commercial account, the average is around 1,000 transactions over a 12-month period, and 10% of that, the population that we looked at, had over 95 pages worth of transactions. And in a lending space, that volume of data just becomes unmanageable, and it's really where we see the benefit of the open banking data on top of the open accounting data and the normal credit reference agency shared data to give that real holistic view of what a business is doing.
So Nick, I want to come to you in Singapore. I don't know if maybe you could give some background as well on the regulatory situation there, which is obviously slightly different from the UK, and whether some of the solutions that you guys or open banking, what's happening in Singapore in relation to that.
I wouldn't start so much with the regulatory situation. I'd say Singapore's been my home since 2007, and I moved here from Australia. I was on a transfer with a bank, and I would say that the words at the time, mass affluent, became more and more frequently used. And if anything, that segmentation of customer, upon reflection, made me realise that banks in general were moving into a period of really having to manage risk. And so they became considerably more risk adverse. And this was only exacerbated when we entered into the financial crisis of 2008 and 9. And so I think since we see now today like a similar sort of downturn, a similar period that we're facing, where there's a lot of pressure on small business resulting from a similar dislocation, this time due to pandemic. The one thing that gives some optimism is that we have opportunities now for open banking solutions to serve as a catalyst, to improve credit infrastructure, to provide better real-time sort of cash flow management, some of the solutions that we've been hearing, and really enhance offerings to customer. So I think for now, like, we're finding that there is an appetite because the demand's there, and also venture funding is going into these companies to support the gap that the banks were choosing not to serve.
Yeah, so just moving on ever so slightly, Neil, why are the banks choosing not to address this? I mean, maybe there's an obvious answer here. I don't know if you can speak to that.
I think it's a range of things, really. I mean, I think Nick summed it up. I think banks are are particularly they are interested in larger businesses and businesses that have got a higher revenue going through. Most high street banks have removed their customer relationship managers for SMEs, so a lot of SMEs don't meet that threshold. So there isn't the support there. There isn't the guidance there to do that, to actually get involved in this market, really. And I think, again, what we've seen with the C bills and the P bills is that banks were on our very, very risk averse. They only really started lending when the government stepped up and basically guaranteed a chunk of that loan. I think the work that is going on in open banking and giving people choice to finance is vital. Is really essential work, and giving people an alternative means to get paid. But from our perspective, we would rather increase the velocity of payment and make sure people get paid on time. That is the key for us. Bringing open banking and alternative means they can go to is essential, really. It's having choice, because the high street banks, really, they're not that interested.